Hope everyone is doing well. Let me there we go. So, overall on the day, we had pretty much a trading range day, and you could argue it was more bearish than bullish, but we had a lot of buying pressure throughout the day. On the daily chart, another bear trend day added to the micro channel. At some point, we're probably going to bounce. So tomorrow, I think we're going to bounce for at least a day or two. So whether or not we gap up, we'll see. But I suspect tomorrow and the next day we'll probably rally. Maybe we test back to 4,400. Type bear channel increases the probability that the first reversal up will be minor and form a lower high, and we'll get a second leg down. But overall, big up, big down, big confusion, and probably sideways. First bar of the day, we have a bull trend bar. Big bar, so big risk, forcing traders to buy high in probably a trading range day. As big as bar one is, I suspect it's a strong enough surprise that it'll probably lead to at least a second leg up. So you can argue it's by the close bar. But if you're buying, it's a big trend bar. So big bar, big risk increases the probability that the upside will be limited. You can see the tail below one is really small. And because of that, it's also a magnet. The low of bar one is a magnet. The low of bar in general, the opening tick is when you look at the daily chart, let me do it like this to better explain it. In general, bar one, the opening tick of bar one is usually not the extreme of the day. So here, even though the open is 82.75 and the low of the bar is 82.50, it's got a one tick tail, and that increases the probability that we're going to fall below bar one. Bar two, we have follow through consecutive bull bars. Is it by the close? It might be, and odds are we'll get a second leg up, but big bars, so the pullback could be deep. Three, another big bull trend bar, probably by the close and always in long and going higher. Four, we have a reversal. It's kind of an expanding triangle here, here, and here, and then 1, 2, 3. Big rally. This might just be a buy climax on the open, which means the market may have to pull back here. And then we have another bull bar, and then a doji, an inside bar on 6. Strong enough rally for the first 3 bars. Probably the market will have to at least go sideways before the bears can get a reversal. 7, we have a bear bar, and then 8, we have a big doji. So starting to form tails above bars, that will increase the probability that the market may have a deep pullback. Still always in long, and probably traders buying and scaling in lower. 9, big bear bar and reversal. Strong enough sell-off from the high of here to the low of 9 that the first reversal up probably will be minor. In other words, there's probably sellers somewhere above. 9 is a high 1, so it's an okay swing buy, but it's got a really big tail below, and that will lower the probability of traders buying below it. 10, we have a reversal bar. Another sell below 10. Some traders will take it, but tight trading range, I suspect probably buyers below. 12, we sold off and we're pulling back, so it's a double bottom with 9. Bad signal bar for the bulls, probably sellers above, but tight trading range and probably going to go more sideways. And then 12, we have a doji bar, sellers above 11, but bad buy signal bar above 12, so probably still going to go sideways. we may still have to get a second leg up from the first three bars, 1, 2, and 3. And then instead, we got the opposite. The bulls tried to form a double bottom with 12, and they failed on 13. 13, big enough surprise, probably going to go at least a little bit lower. 14, followed through, arguably sell the close, but downside probably limited, probably buyers below 1, buyers below yesterday's low. So not really an ideal area to be selling, but bears will sell, betting that we will at least break below the low of the day and the low of Friday. 15, a strong reversal bar, buyers below 1, buyers below 67. What about sellers above 15? There probably are, but 15 is a reminder that something is wrong with with the context for the bears. It's similar to last Friday, consecutive bear bars and then a bull bar. It's a reminder that there might be more sellers above. 16, big bull bar. Bulls making money above 15 in a tight bear channel. That is not common if the day is going to be a bear trend day. And because really the first three bars of the day, 1, 2, and 3, it increased the probability that the day was in a trading range. So when you see a bar like 16, is it a buy the close bar? Not necessarily, but it's probably more, it'll probably lead to a second leg up, which means there's probably buyers below 16 or 17 scaling in lower. The bears that sold the 15 high here and scaled in are trapped, and they will probably use any pullback to exit. And then we have a doji on 17, strong enough rally, probably buyers below. 18, we triggered the buy below and turning up, but 18 is a high one buy. So there might be sellers above. You can see there were traders that got trapped. Bulls bought the 12 low or the 9 low, scaling in lower. They got trapped in here. And because of that, a lot of those traders are disappointed. The bulls that bought and scaled in, they'll use this bounce to exit. And that's in part what happened on 19. 19, strong enough bear bar, probably at least going a little bit lower. But we're testing a breakout point. We're testing a breakout point at this 15 high. And because of that, there might be more buyers in this area. And then 20, another big bear bar, but a big tail below, testing the area where bears got trapped. Some bears sold the breakout below 1, they got trapped and they used 20 to exit. Bulls, they made money buying during 15 as it went below 1 and below Friday's low, so they will buy again. 21, an inside bar, probably sellers above. Strong enough bear bars, 19 and 20 for a second leg down, and that's what happened on 22. 22 and 23 going a little bit lower, but a possible wedge, 1, 15, and 23. And strong enough rally here, strong enough rally here, probably buyers in this area. 24, reversal, bull bar, and probably for the bears, it's a pullback after 22 and 23 for a second leg down, but probably buyers in this area. And then 25, you can see some bears giving up. Test of the 23 close. So bears buying back shorts, disappointed 24. And that's in part what caused the rally. But the channel down from 19 to 23 is tight, and that will increase the probability that the bulls are scalping. '28 reversal up, 2 legs up for the bears. There we go. Sorry about that. 28 reversal up, 2 legs up for the bears. Leg 1, pullback, leg 2, but at the moving average. So probably sellers in this area. And the bulls, they got a bull bar on 29. It's a possible low of the day, but tight channel. So probably going to go sideways here. And then 30 and 31. 31 is a second entry short. after it triggered below 29. For the bears, they will sell below, hoping for a sell off, and they might get it. Low probability, but some traders will take the sell stop above. And then we have a strong bear breakout on the following bar, 32. Big enough bear bar, probably going to go at least a little bit lower, but look to the left. Every one of these lows reversed up, so there might be more buyers in this area than sellers. 33, reversal up. It's a possible low of the day, but after 31 and 32, the bulls probably need a second entry buy. 34, 35 consecutive bull bars reversing up, so good for the bulls, but probably going to go sideways. And then 36, we have a low one, but probably buyers below. 37, 38, testing the lows down here where the bears originally got trapped. 39, another new low of the day, second leg down after 31 and 32, but probably buyers in this area scaling in lower, which means bears will probably look to sell out of longs, buy back shorts in this area, and bulls will probably look to establish longs. Bull bar on 41, probably an okay swing buy, but expect a minor reversal. And then 42, good bar for the bulls, but at the moving average, so probably some profit taking. 43, bear bar closing on its low, but a micro channel since 39, so probably buyers below. And then we got a second leg up on 46, 47. 47, second entry short, but getting a lot of bull bars in here, so probably buyers scaling in lower. And we got an outside up bar on 48. 48, good for the bulls, but we went pretty far below 47, so that increased the risk that there's sellers above 47. And then we have a bear bar on 49, good for the bears, but strong enough of a surprise. 48, probably going to go at least a little bit higher. High one by 49, but there might be more sellers above, which there were. 51, second entry short, but middle of a tight trading range, so not really ideal to be selling. Could be buyers below. For the bulls, second entry buy on 52, but it didn't trigger, and we channeled down back to almost a low of the day. 60, a surprise. 61, good entry bar. Strong enough breakout follow through that we may get a measured move up, but tight channel. So you have to wonder if this is just a trap for the bulls. But I suspect at a minimum we'll get to the open of the week and the high of 51. Now we have three consecutive bull bars, 61, 62. Good for the bulls, probably buy the close and traders scaling in lower, but big risk. Therefore, the bulls will be quick to exit if we don't go anywhere and we start to go sideways. And you can see we pretty much went sideways for several bars, and then bulls gave up on 75 and we sold off to a new low. For stop entries, I thought it was okay to buy above 1, sell below 8. You can buy above 15, but it's probably minor at best. Therefore, it's a scalp to the moving average. Bears will sell below 19. And not really clear through here. Bears get out above 24. Maybe bulls buy. Bears sell below 31, but not easy. And then they probably get out above 33. If a bull buys above 33, maybe they get out below 36. And the bears can sell there, but not easy after 3 bull bars. And then they get out above 41, bulls buy, hold for a few legs. If they get out below, if a bull gets out below 47, I don't think they buy anywhere in here. And they definitely get out below 51, and bears can sell. And they probably get out above 60. Bears get out above 60, bulls buy. And that's probably it for the end of the day. And then I'd get out below any of these bars. Limit orders, sellers above 6, buyers below probably 5 or 4 right here. Sellers above 11, probably buyers below 17, but not that great of a trade. Buyers below 21, scaling in lower. Buyers below 26, probably buyers below 33. And lots of limit orders in here. And then probably buyers below 63, 64, 65 for a second leg. And that's probably it. Buy the close, sell the close, probably buy the close 2, buy the close 3, probably sell the close on 13, maybe 14, but you got to be quick to decide what to do on 15. Sell the close 19 or 20 for a second leg down. probably, maybe sell to close 31. As far as selling the close of 32, you can, but not ideal. The risk is big for the bears, therefore probably going to pull back. Probably buy the close, maybe buy the close 42, but better to look to buy a pullback and then buy the close probably 60 or 61 and 62. But then you have to decide what to do here, and you probably just get out. Okay, I've got time for one or two questions, and then for those that are in the trading room, you can feel free to ask me questions about today, tomorrow. Is bar 10 a trade where you need immediate follow through? 10 is a second entry short. So if you sell below it, stop above. That it's not the greatest follow through, but it's a bad buy above, and it's also a bad buy on 12. So because of that, more bulls started giving up and more bears started selling. Okay, so or a trade where you should give it a couple of bars. I'd give it a couple of bars because your stop is certain. It's above 10 or above the high of the day. How would you evaluate a pin bar? I'm not exactly familiar with pin bars, so maybe elaborate more on what you're asking. But what you're saying is how would you evaluate bars like 9, 10, and 19? So 9, let's start with 9. What do I think about with 9? 9 is a high one, but the sell off, the tail below is a big tail, and that's a breakout. It's a pretty big breakout below 8, which makes me think it'll get a second leg down. 10 is a breakout to the upside and then a sell off, but it's a retest of the tail up here. So the bulls, this was a rally and a sell off. So it's a retest. Plus, I think there's sellers above, and then you get a bear bar closing on its low. The risk is big for the bulls. So I think a lot of bears get out here. A lot of bulls get out, makes it a credible sell. 19, big bear bar closing on its low. I thought probably strong enough for a little bit lower, but probably buyers somewhere in this area scaling in lower. Okay, that is all the time I have today. But thanks everyone for watching. And if I didn't get your question, feel free to ask it on the next session, or you can ask it tomorrow in the trading room. All right, hope everyone has a good rest of their day.